So Amazon is in the midst of a big breakout. And today I want to dissect the big bullish continuation pattern that formed and show you what led up to this breakout. Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. Welcome to Next Level Charting. So today we're going to cover a couple of things. As I said, we're going to look at Amazon and dissect the big pattern and the pattern within the pattern that was developing. Then we'll look at the Amazon effect on the consumer discretionary SPDR, and then show you what the equal weight consumer discretionary sector ETF looks like, because it treats Amazon just like a normal stock. Let's hit the charts. So the cup with handle is a bullish continuation pattern. It typically marks a consolidation period, and that consolidation period follows what was a big advance. So it's kind of like the rest within the uptrend. And it was popularized by William O'Neill of Investors Business Daily. And he has the book from 1988, How to Make Money in Stocks. It is a classic, and I would suggest you take a look at it if you have not already. And there is a very old example of J-bill circuit. I don't think this company's even around anymore. Taken out or taken under, but there's the breakout. And there's also an article in IBD, Investors Business Daily, that shows a cup with handle example and how to play it. The example is with Baidu. So we're going to look at the one with Amazon. Now, I would call this the mother of all cup with handle patterns because it is huge, huge. There you can see Amazon with this big move up in 2017 into 2018 and hitting 52-week highs in the summer of 2018. And then you had a very sharp decline, a move back up to resistance, and this is what forms the cup. So you've had a reaction low and a move back, but you back off of resistance and you form a much higher low than this low here. And so you kind of oval around, and once you're getting up into that resistance zone there, you have your cup with handle. And then the resistance level is called rim resistance. And here you can see a breakout. William O'Neill is also a big volume aficionado. I don't use volume so much. I'll use it for individual stocks, but typically I will never use exchange volume, and rarely will I use it for ETFs. I think it's better when you're using ETFs and exchange volume to look for like a capitulation selling. But for individual stocks, I think volume can be helpful. And in the case of Amazon here, you can see there is a huge volume expansion. We basically had the highest volume since January of 2019. So the highest volume in a year on the breakout. You can also see that that 200-day was still rising from the summer until the fall, and it was still in a long-term uptrend there. Sure, this was a long consolidation, but it is a consolidation within an uptrend. Now, typically for this pattern, you'd measure the distance from the low of the cup to the rim resistance, and that's maybe 600 points, 700 points. So that would target a move to the 2,700, 2,600 area roughly. But take targets with a bucket of salt, okay? You have to watch price action on a regular basis and continually evaluate to see if the bullish thesis remains. But right now, the bullish thesis is there, and the breakout is clearly bullish until proven otherwise. So what now for Amazon? Short term, it is getting a little bit extended because you can see that it is up 17% since that low there in late January with the move from 1820 or so to 2133. So it's a big move. But a couple of things with technical analysis to keep in mind. First, that breakout zone, that resistance zone, turns into a support zone. So if we get a throwback to that 2025 area, that would be the first place to watch for support and a bounce. And I imagine in a few weeks that 50-day moving average will continue to rise and slowly move up towards that level. Don't know how fast it'll rise. It depends on how high the price rises. But right now, that 2025 area. And then the second thing is RSI. Now you say, well, RSI typically needs to go below 30 to become short-term oversold. But sometimes when you're in a strong uptrend, you don't get all the way to 30 on pullbacks. You can see this pullback that we had here in late January did not get to 30. So if RSI gets into that 40 to 50 zone, that would be a mild oversold condition that could give way to a bounce. So that's what I'll be watching going forward for Amazon. So what led to the breakout in Amazon? Were there any signs ahead of the breakout? Well, there definitely were. And I pinned this article on December 21st, a boring stock with a bullish theme for 2020. And it was also on trendinvestorpro.com. And if you look here at this chart, what we were looking at was the Bollinger Band contraction. And I want to show the chart now, a live chart that shows that Bollinger Band contraction. There you can see. So basically, this is when the article is written in December, when Bollinger Bands are contracting, and they're at their lowest level in years. They're below this low level that we had in 2017. So we had this contraction and then the breakout. And you can see here we had a contraction and then we had the breakout. We had a little fallback after the breakout, but a breakout doesn't get negated just because you pull back after a big move. The breakout was still there and it was still bullish. And so if we look a little bit further down, I got to move the screen for seeing that. We can see what happened with the PPO. There was a breakout on the PPO. So in addition, here's the January breakout. And you can see Amazon's already climbing. First of all, you have this wedge, and it holds the low from June there. So you had a successful support test, a break above the wedge line. Then you had a higher high, a pullback, another higher high, a pullback, and then there's the breakout. And then there's that principle I was talking about of broken resistance turning into support. And then we had the throwback, and this, of course, is the big earnings gap up. Now, I know it's tough to play a stock before earnings, but the technicals were aligning here in that you had breakouts, you're working your way higher, you have the throwback to a successful support test. Now, the indicator window shows the PPO, and we also had a momentum breakout confirming this breakout in price. And the PPO hit its highest level in months there, and that's a momentum breakout. And what exactly does that tell us when the PPO hits a multi-month high? It tells us that momentum is strengthening. And I'll show you this next chart where I kind of break down the PPO to show you what it's actually telling us. There you can see the PPO is the difference between the 12-day EMA and the 26-day EMA. 12-day is in red. And so the PPO turns positive when the 12-day moves above the 26-day, as it did here in the second half of December. And then you can see the PPO hits that multi-month high. It gets above the November-December highs there. And that means the 12-day EMA is the furthest above the 26-day EMA that it's been in months. All right, here it's above, 12 days above the 26-day EMA, but it's not as far above as it was here when we got the breakout. And that shows a momentum upthrust, if you will, and a momentum, an increase in upside momentum, of course, is also bullish. And that brings us to the pattern within the pattern, okay? I showed the big cup with handle. Well, you can see here when this low is forming here in October, November, there's the wedge that I showed you on the daily chart before. So you see that if we get a wedge breakout and we get above the rising 40-week moving average again, well, you say, okay, now we're breaking out and turning up. Well, then we can say, oh man, that might be a bigger cup with handle taking shape because now we're moving higher. And then we get this surge, and clearly the cup with handle is taking shape after that surge there. But this is an example of the pattern within the pattern. You're anticipating the cup with handle because you got these breakouts here in October, November, and December. So that's a way to get a jump on a bigger bullish pattern. And if you want to know all the gory details about Amazon, you can go up to the top of every web page and type in the symbol. And then from that drop down, select Symbol Summary and click Go. And here I am on that page, and you get a whole bunch of statistics on Amazon, fundamentals, technicals, scooters, and more. So Amazon is the biggest sector in the consumer discretionary SPDR XLY. It's kind of ridiculous here. I got these from etfdatabase.com, etfdb.com, and Amazon is 26% of the ETF. Home Depot is 10.5%, and then you have McDonald's and Nike and Starbucks. But clearly Amazon is the 800-pound gorilla in this sector SPDR. Home Depot is not too bad, 10.5%. And of course, if we look at the chart, we can see a bullish breakout in XLY, and it just happens to be in December when Amazon was breaking out. You had an ascending triangle taking shape, so you have higher lows showing buying pressure coming in at higher and higher levels on the dips. You have a rising 40-week moving average, and you break above resistance to confirm the pattern. You got a little throwback to support and the bounce. But I think as long as Amazon is bullish, you have to be bullish of XLY. I would put a support zone in this 120, 123.4 area because you got the rising 40-week coming in here and broken resistance turning support. So that's the first level to watch for a longer-term trend reversal in XLY. And then if you look at the performance at the bottom, this is the performance since February 2017 for Amazon. It's up 158%. XLY is up 57%. And there you can see the lowly RCD, the equal weight consumer discretionary SPDR. It's only up 25%. But hey, 25% for a broad sector over a 3-year period is not shabby. All right. It's just that Amazon is really powering XLY, and that's why it is up so much more than RCD. It's not that RCD is underperforming again. It's just that XLY is really outperforming. All right. Relative weakness doesn't mean something is actually weak. It just means it's less strong than the other sometimes. And I just got a few seconds here left, and I want to touch on RCD, the equal weight consumer discretionary SPDR. You can see Amazon is a mere mortal, 1.88% of the ETF, but we've got a breakout. We've got a rising 40-week moving average. Even though it's underperforming, the breakout is holding, so it is still bullish overall. But if we close below 104, that would call for a reevaluation. So as you can see, the Amazon effect is alive and well for the consumer discretionary SPDR. As long as Amazon holds up, that is bullish for that sector. The equal weight version is not as strong, but it's still holding up and is still net positive on for the market. So thanks very much for tuning in to Next Level Charting, and of course, have a great day.